calls in arrears and calls in advance. We'll discuss the theory once before we complete this chapter again. So I will not concentrate more on the theory part now because I would like to go through the latest material. Your material is all old because Companies Act 2013 has been enacted, and I'm waiting for the institute to come out with the latest study material so that I can discuss the latest theory on company accounts also for you, if there are any changes. Okay, so I'll discuss that. Maybe tomorrow or day after I'll try to find out if there are any changes, and once we do that, I'll discuss the complete theory for you again. Okay, so now what is forfeiture of shares first of all then? Cancellation of shares. Now I think yesterday we discussed about calls in arrears. What do you mean by calls in arrears? We are discussing what? Forfeiture of shares. Forfeiture of shares. Now, a company will write letters to the shareholders, or the board will make calls on the shareholders to make the payment. Suppose shareholder has promised to pay 100 rupees and he has still now paid only 60 rupees. The board can make a call to the shareholder. Call means not phone call. Through a notice. They will send a notice to the shareholder asking him to make the further payments. And if shareholder is unable to pay the amount, we say it is calls in arrears. Now, if shareholder is unable to make the payment, the board will take some action. The board will send again another letter saying, shareholder, we have already requested you to pay the call amount. You have failed to pay the amount. We are giving you another 15 days time. Please make the entire payment along with interest before the date mentioned in this particular letter. We will give 15 days time and fix a date in that letter. So on or before this date, please send us money by check. The arrears amount along with interest. If you don't send, then the company is going to forfeit your shares. They will send that warning in the letter itself. So, what do you mean by forfeit? The company is telling the shareholder, we will remove your name from the list of members. Remove you from the list of shareholders. We will make your capital account Gundu Sunna 0. We will make your capital account 0. We are not going to leave any credit balance in your capital account. Even though you have already paid some amount, we will make your capital account balance 0. And whatever you have paid to us, forget about it. The company is not going to even return whatever money has already been paid by the shareholder. Very good, understand? So if a shareholder is unable to send the calls on time, call it as calls in arrears. When calls are in arrears, the board will write another letter to the shareholder asking him to make the entire payment along with interest on or before the due date. A date will be given in the letter. On or before the date, you have to make the payment. The date will be fixed in the letter. On or before that date, shareholder has to take an action. He has to make the payment along with interest. And the letter will also warn him, if you fail to make the payment, then your shares are going to be forfeited. Forfeited means the company is telling the shareholder, we will remove your name from the list of members and will make your capital account balance 0. And if you have paid some money to the company already, forget that amount. Assume that you have donated it to God, you are not going to get it back. That is called as what? Forfeiture of shares. Is it clear? If you go as per Companies Act, the Companies Act provides the board can reverse forfeiture. Yes, there are some powers which the board of directors have. The forfeited shares which the company has. Now company has cancelled some shares. No? Those shares the board can dispose it of according to their discretion. That means they can find somebody who is interested to buy the shares, allot him the shares and issue the shares to them. Not for free, for consideration. They'll take money and allot the shares. That is called as reissue of forfeited shares. So today we will discuss normal problems, simple problems on forfeiture and reissue of shares, how are we going to deal with it? Now, will the company get any profit out of this? Yes. Shareholder has already paid some amount. What we are saying? We will make your capital account balance zero and we are not going to return the amount which you have already paid. It is a profit for the company. That profit is called as future profit. What's called as future profit. It is not profit from sale of goods, from provision of services. It is not revenue in nature. It is a capital profit coming out of a capital transaction. Okay. Those profits are not available for declaration as dividends. Future profits are transferred to capital reserves. Okay. Let's reduce the speed of the fans. Continue everyone. So let us do a problem. Which company we have been dealing with till now? J. So K. K Limited. K Limited issued shares of face value 100 each. K Limited issued shares of face value 100 each at an issue price of at an issue price of 100. Let us not add masala in the first problem itself. Okay. I think you know how a curry is made. Initially we do only cook vegetables. At last we put lot of masala on it. And then you put kothmir. Right now. At an issue price of 100 rupees. Full stop. So it is issue of shares at par. Students will love par values because problem is very simple. Continue. K Limited issued shares of face value 100 each at an issue price of 100. Full stop. Application money. Application money 30 rupees. Allotment 30 rupees. First and final call. First and final call 30 rupees. Not 30 rupees. First and final call 40 rupees. First and final call 40 rupees. So what is the breakup? Application 30, allotment 30, first and final call 40 rupees. Full stop. First and final call 40 rupees. Full stop. Write down. A shareholder holding 500 shares in the company failed to pay call money. Failed to pay call money and his shares were forfeited. Failed to pay call money and his shares were forfeited. Full stop. His shares were forfeited. Full stop. All the shares were reissued. All the shares were reissued at 90 rupees. All the shares were reissued at 90 rupees. Write entries in the books of the company. Write entries in the books of the company relating only to this shareholder. Write entries in the books of the company relating only to this shareholder. Full stop. Now, see, very good people, we know how to write entries. Till yesterday we have assumed all our shareholders are very nice people. Whenever we make the call, they are making the payment. They are all simple entries which we have already learned. So now we are going to deal with crooks. People who promise to pay money but later on fail to pay money. First of all they promise, then they are not able to honor their promise. How to deal with such people? In the books of the company. That is what we are going to discuss in today's class. Continue. First transaction. When application money is received. Now I want the entries loudly from you. When application money is received. This is not loud. Bank account debtor to share application account. How much? 500 shares he is having. 30 rupees he has paid. How much is it? 15,000. मेरे क्लास पे इज्जत ही निकाल दे रहे तुम लोग. What is entry we passed? Bank account debtor to share application account. Next, what do we do? As soon as shares are allotted, application money is transferred to share capital. What is entry you write? Now this 30 rupees is purely part of face value, so it should be credited to capital account. What is entry we pass? Share application account debtor to share application account debtor to share capital account. How much? 15,000. Share application account debtor to share capital account 15,000. Next. When allotment money is made due. Allotment money is made due. What is entry you write for allotment money is made due? Share allotment account debtor to share capital, because there is no premium or discount. Share allotment account debtor. We make the shareholder a debtor in this register called as share allotment register. How much? 500 shares into 30. 15,000 rupees. This 30 rupees is part of face value. So credit share capital. Next, when allotment money is received, please tell me what is entry we pass when allotment money is received. Bank account debtor to share allotment account. Bank account debtor to share allotment account 15,000. Next. Till here he was a very good person. Now maybe he is still a good person. Maybe he is in financial difficulties. That is why he is unable to pay the amount. Okay. So what happened next? We made the first call and the final call. What happened? Was he able to pay? No. First of all, company is making the call due. What is entry you write when you make the call due? Share first and final call account debtor to share capital account. Share first and final call account debtor to share capital account. Share first and final call account debtor to share capital account. How much amount? 20,000. and final call account retire to share capital account 20,000. Now what happened? Share first and final call. Was he able to pay or unable to pay? The shareholder was unable to pay the first and final call. So what is entry we pass when he is unable to pay the first and final call? Calls in arrears account retire to share first and final call account. How much? 20,000. How did you get this number? 500 into 40. So we have removed his name now from share final call register and we have put him in a special register called as the calls in arrears register. Write down next. Entry for forfeiture. Entry for forfeiture. Now what will the board do after this? The board of directors will write a letter to the shareholders. What they will say? Boss, we are giving another 15 days time. We are giving you a date on this letter. Please pay the entire amount along with interest. If you fail to pay the amount, your shares are bound to be forfeited. Suppose shareholder has failed to pay the amount. Now company will forfeit his shares. I told you what is forfeiture? We will remove his name from the register of members. Second, we will make his capital account balance 0. And will we return the amount which you have received from him? We are not going to return it to him. First thing what you have to do is you have to make his capital account balance 0. If you have some credit balance in his capital account, on one particular day he will come to the company and say, see, capital account credit balance is there. I am owner. He will start using his ownership rights. So we have to make his capital account balance 0. So what we should do now? You have to cancel his capital account credit balance. You have to make it 0. Look at the board. Share capital account showing credit balance here. Share capital account showing credit balance here. Share capital account showing credit balance here. Share capital account is credited 3 times. Credit, credit, credit. 15, 15 and 20,000. Plus, plus, plus means you have to add those 3 numbers. 15, 15 and 20. 50,000 rupees has to be now cancelled. We have to debit the share capital account. So we'll write forfeiture entry. Forfeiture entry. Share capital account retire. How much? 50,000. Why 50,000? His account is already credited with 50,000. So we are cancelling his capital balance 50,000. Wait, don't be in a hurry. Okay, now you have cancelled his shares. Please tell me, will he pay this amount to us anymore? Do you hope that that amount is going to come once you forfeit? It may come. Legally he may be bound to pay the amount. Company side provides this guy will be liable to pay the amount till that amount is collected by the company from some other shareholder. So legal provisions say the shareholder will continue to be liable to that amount till the time that amount is collected by the company from some other person by issuing these shares. So legally he is bound. But accounting purposes, do we expect that money to come? No. So what we have to do? Cancel calls in arrears. 2 calls in arrears. 20,000. This was the total capital credited to his account. This is the amount of capital called up but not paid. Out of 50,000, 20,000 was not paid, but remaining 30,000 he has paid in cash. No, boss. That amount, are we giving it back to him? No. So we are retaining the money with ourselves. He has paid money, but are we returning? No. It's a profit for the company. That profit is called as share forfeiture profit. Nominal account, debit all expenses and losses, credit all incomes and gains. It's a kind of a gain for the company, so it should be credited to share forfeiture account. there is a formula which you can remember for feature account balance, for feature profit. What is the meaning of for feature profit? It is face value of the shares collected in cash. On whatever shares you have forfeited, find out how much was collected towards face value. In this problem, on 500 shares, we collected 30 rupees on application. We collected 30 rupees on allotment. 30 was towards face value. Allotment money 30 was towards face value. Face value collected in cash. 60 rupees was collected in cash towards face value into 500. 30,000 is your share per feature profit. Is it clear? This is the per feature entry we are going to pass. What was the first step? We cancel the credit balance in his capital account. Second, we cancel the calls in arrears account. Third, we recognized share per feature profits. Okay. Now, what will the company use these profits for? When the company reissues these shares to somebody else, the company may have to issue the shares at a discount to get the shares reissued. In such a case, company is going to suffer a loss. To meet such losses, company is going to use these profits. And if it has profits over and above such losses, such profits will be transferred to capital reserve. Write down next. Entry for reissue of shares. Entry for reissue of forfeited shares, same shares. We have snatched away certificates from him. We have snatched certificates from him. These certificates we can give to outsiders. And when we try to sell it to outsiders, what they are saying? Give it us to at a discount, then we'll buy. We'll say, okay, give money to us. We are also happy because we have already collected some money, no? Even if we suffer some discount, we don't have a problem. Write down. Entry for reissue of shares. Write down. Reissue entry. Bank account debtor. At the time of reissue, you will not have application, allotment, first call, final call, no installments, lump sum. Bank account debtor 500 into 90. 45,000 we have collected. Now please tell me, how much should be credited to the capital account of the person who has bought these reissued shares? Somebody has bought these reissued shares, no? His capital account should be credited with how much? See, I mean, if somebody wakes you up in the midnight and asks you what should be credited to capital account, you will say face value and then sleep again. So you have to say face value. So face value has to be credited to the capital account of the purchaser of these reissued shares. So leave some gap here and then write to share capital account 500 into 100. I told you, no, you can receive more or receive less when compared to face value, but you have to always credit capital account with face value only. You may collect more, you may collect less, but capital account has to be credited only with face value of the shares. Is it clear, everyone? Now, please tell me what should we write in that gap now? 5,000 loss for us, no? It should be discount on, not discount. This loss can be debited to this account. Share per feature account debtor 5,000 rupees balancing figure, or 500 into 10. So loss should be debited to which account? Share per feature account. If you debit discount, no problem, but that discount has to be again closed by debiting to share per feature account. So directly we debit share per feature account. Now can you tell me what is the maximum discount company can give? You cannot exceed this profit. You cannot exceed this profit. You have forfeiture profit of 30,000, no? You want, you can give discount. You can give more discount. But it cannot exceed share forfeiture profit. Is it clear? Continue. Did you understand this problem? Now, wait, problem is not over yet. Out of the share forfeiture profit 30,000, forfeiture profit utilized 5,000. What about remaining 25,000 profit we can enjoy? Company will transfer those profits to an account called as the capital reserve. Write down. When forfeiture profits are transferred to capital reserve, when forfeiture profits are transferred to capital reserve, what is entry will write? Share forfeiture account debtor. How much balance is there? Please tell me. 30 minus 5. 25 credit balance is there. So whatever is there in that account should be transferred to capital reserve. Share forfeiture account debited with 25,000. Capital reserve will be credited with 25,000. Next question. We have finished J, no?